Hello, so today we'll be looking at Eurnzd from daily time frame to H1 time frame. So here we'll be looking at a W pattern. You can see a low here. Let me highlight it. This is a low around this place. Then this is a slightly lower low around this place. And then when you look at the momentum indicator, there's a divergence of price and momentum, meaning that price is printed a lower low while momentum printed a higher low, meaning that this was a false move and that stop losses are being hunted around this place for early buyers who had entered the trade and had placed their stop losses below this swing low. So let's clear our chart. Remove drawings. Assume we marked this swing low so you have that swing low and you have this swing low here. So this was our low right there. And then we formed a lower low at that point. While that was happening, when you look at momentum indicators, I explained in Euro Swiss analysis over the weekend, either Euro Swiss or Eurocard, on how W patterns happen and the ideology behind it. Well, a lower low was formed. If it was a legit bearish move, this low that coincides with this low should have been lower than the momentum low that coincides with this low, if that was a legit move. So if a scenario like that would have happened, we would have waited for a retrace of prices to look for positions to sell. But in this case, here is our low. But then when prices form a new lower low here, our momentum indicator forms a higher low. So you get it? Basically, after you see such a scenario, you should be looking for opportunities to go long. This analysis I had given it weeks before. So let's scale down to low time frames. Yeah, I think I'd given it around when it was around 1.57500-ish, and our target was obviously at the neckline. So you can see how the divergence is strong on our low time frame, H4 time frame. We are forming a lower low right there, well a higher low, while our prices are forming a lower low. So today basically I wanted to discuss the second scenario of conservative entry for a W pattern. Over the weekend I explained how you look for entries around this place as a W pattern begins. So today I wanted to show you the second scenario, whereby one waits for a break above the neckline, above the neckline. So remember, in the video that I did over the weekend, if you get your entry around this place, your target is always uh, on the neckline. Reason being, prices might just come, hunt stop losses here, and come back down. So the second scenario of entry is whereby you wait for breakout of the neckline, wait for prices to push up significantly high, then wait for retracements to get your conservative entry. So and then I told you in every setup, it always gives you clues on how you will scale in to the trade. So in this example, like right now, for a new trader, you'll just wait for a retest here, and maybe after you see rejections, just pick your trade. But as you gain experience, you will always be looking for other scenarios that can take place. Like maybe you'll find one person drawing a Fibonacci and waiting for maybe retests around the Fibonacci level, 50 to 50 or 61. There's another one who will draw maybe a trend line like this and wait for some reactions around here. There's another one who will scale in to lower time frames. So in this example, it kind of looks shaky, but in this example, I'm looking at so right now we are on H1 time frame. I'll be looking for an entry. I'll be looking for a clear pattern around this place to get my entry, maybe a break of a recent high, then wait for a retest of order block, or maybe connect my swing highs and swing lows of how the prices are behaving. Like here, something like this. These are our swing lows. Here are swing highs. Basically, on a H1 time frame, it seems like it's forming a wedge pattern, continuation wedge pattern. After a bullish rally, you see prices exhausting, forming lower highs and lower lows, but kind of squeezing. That's what a wedge pattern is. So in such a scenario, I'll be waiting maybe for prices to reach this trend line, pushes down back again, forms either two scenarios, either an equal W pattern, a minor one because it's in H1 with divergence of prices, obviously. If you go back to my recent videos I've ever done, I think it was a Audi NZD pair of a wedge pattern, so you'll find it there and you'll understand how wedge patterns behave. So I'll maybe wait for prices to reach this trend line, retrace all the way to this low, form maybe an equal low with divergence of prices and momentum, or maybe the prices pushes all the way down to this place and still with momentum, with divergence of momentum, then I'll look to scale in my first entry at this place. Second entry, if the prices behave that way, I'll scale into my first long position around either this swing low, either this swing low end, prices reach here and retrace to form a minor W pattern, or when prices push down to this place with still some divergence. That will be my first long position. Second long position, I'll be looking to, once prices break out of this wedge pattern, of which obviously I'll expect prices to reach here, retrace, then come breakout. Then after breakout, I'll wait for maybe a possible retest to add a second position. So where do you put stop losses for wedge pattern? If you enter around here, your stop loss should be below the swing low. Targets for W pattern. So targets for W pattern in this scenario, I told you if you get an opportunity around this place, your first target should be at the neckline. If you'll be waiting for retest around this place and then prices start moving to your direction, the distance from your lowest point of the W pattern, which is somewhere around there, 1500, to the neckline should be the same distance. After where the price will start picking momentum back to bullish side. So if prices come and make a minor double bottom around here, then I'll find my first entry there, and obviously my target will be around the 1.77 ish area. So that's the analysis on Eurnzd. I wanted to do an example of a second scenario of how you trade W pattern, whereby you wait for the neckline to be broken, prices to push up, retest, then get a conservative entry. Yeah, so that's all for today. I'll try to record more videos as the market presents itself within the week. So let's look at, maybe I did analysis on Eurocard over the weekend, and you can see it's playing out the way we had predicted. It's almost, I think, 1:2-ish plus. So, and obviously the prices should be reaching at 1.37500-ish within the week, maybe before Wednesday. And momentum seems to be peaking. So that pair seems to be playing out as we planned. Euro Swiss, yeah, it's kind of, our entry was to be around this place, which I never got the entry, but it just started moving on the upside. So let's see how prices behave within the week. Yeah.